Mr. Beat Up. Mr. Beat Up.
I have the beat that describes that moment accurately.
Backed by popular demand, we have Mr. Beat Up here looking at companies that are down but not out. And today we have a cracking company for you. Mr. Beat Up, or Simon, welcome.
Thank you. Good to be here. It feels like the frequency is getting...
As I said, backed by popular demand.
I mean, if you're not going to be back in when the markets are falling as much as they have, what is Mr. Beat Up for?
We should have done this 2 days ago.
I know.
Yeah, but...
Well, if you've just joined the show for the first time, Mr. Beat Up here comes in with stocks that have been absolutely pumped by markets, but perhaps unfairly, and we're going to look at why they're down, but why there might still be a pretty decent investment thesis behind it.
Yeah, I think we covered the criteria last time, but Simo, just correct me if any of this is wrong, but like down more than 40%, the market has overreacted, so like the fundamentals are still there, and there's growth prospects into the future.
Yeah, all that stuff, could be leadership issues, missing financial expectations, just bad news, but the general feeling is the market's overreacted and long-term value is still there.
Well, sometimes it's not the general feeling, sometimes it's your particular feeling.
Mr. Beat Up's general feeling.
Yeah. Because often the market disagrees with you, but you've built a pretty good track record, which is why you're coming on more and more frequently.
Markets have been down. How have you been thinking about it, or what have you been saying?
Yeah, well, the short list was pretty long for this episode. So Google Alphabet was flirting with a 30% drop. Not quite Mr. Beat Up territory yet, but one I'm definitely watching closely. Honorable mention to AMD, Advanced Micro Devices. They're a global semiconductor player. There was a lot of buzz on X that people saying this was deeply undervalued. Interestingly, actually popped 24% today, but they were down nearly 60% from all-time highs before that. But I do have one stock I want to focus on today, and I'm wondering if you guys can guess it. The CEO has actually been on the show before, has the same haircut as Alec. Has the same haircut as Ren.
I know what company you're talking about. So do you want me to guess?
Coinbase.
Yeah. Should we bother doing this guess then?
Keep this all in.
Yes, you're right. We have interviewed Brian Armstrong. Was his name?
Yes, Brian Armstrong.
Yes.
He's CEO.
Yeah.
He and the stock is Coinbase, Nasdaq ticker COIN, Coin.
Nice. Now, for people who are unfamiliar with Coinbase, it is a crypto company. It's a crypto exchange. But it does a whole bunch of crypto services. I think it's the largest crypto custodian in the world now. So all these crypto ETFs, it's holding that crypto and getting paid for that. I guess it's like a crypto investment bank / services company, financial services company.
We're getting to my thesis, but a lot of people still think it's just a trading platform, but it's actually doing a lot more in that space. But I guess if we just start with the damage, so actually up 17% today, but they were down nearly 60% from their all-time highs in December. They got to about $350, down to $150, about $175 today, so still down around 50%. And just to give you a flavor, Q1 was their worst stock performance since FTX collapsed in 2022. Oh, wow. So it's been hammered. And I guess why? Well, 60% of its revenue does still come from trading volume. Bitcoin, we know the story there. It's down quite a lot from its all-time highs, around 20%. Ethereum's been battered about 50% year to date. When crypto's cold, Coinbase's revenue goes cold to an extent. And then you got the macro punches. I've been talking about it this episode already. There's a risk off in the market, lots of uncertainty. So we've seen some investors flee to safety and, high beta stocks get punished. And I guess the final thing, there's still quite a bit of regulatory uncertainty in this space. There was some good news. The SEC actually dropped its enforcement case against Coinbase in February, which had been going on for 2 years, a battle with them about unregistered securities. But there's still no final framework for crypto in the US. So this uncertainty has caused hesitation for investors. So bit of a triple whammy, slumping crypto market, risk off share market, and still regulatory question marks.
So I don't know if there's regulatory question marks while Trump's in power. It feels like they're embracing crypto as much as they possibly can. But you're right. There's been a lot of, uncertainty around crypto. So why do you think it's been over punished?
Yeah, so the market's dumped Coinbase like a bad meme coin, but I think it's anything but a scam. And if you look here, just to start with, the long-term tailwinds and their trusted brands. So like crypto isn't going away. It's global adoption is rising. Individuals, institutions, even governments are getting more involved. The industry's often been clouded with questionable players, and Coinbase really has emerged as the trusted name in crypto. And Brian Armstrong, he's seen really as a steady hand in an otherwise chaotic industry. He's regulatory minded operator, building for long term, not chasing hype. And established institutions clearly trust them. Ren referred to it earlier. We've seen this massive rise in ETFs in Bitcoin, and Coinbase is currently providing custody for 90% of those in the US, including the biggest one of all, BlackRock. So that's a massive endorsement. They're no longer just a retail exchange. They're becoming critical infrastructure for Wall Street's move into crypto as well.
Interesting. I think my question with this before we go on to the tailwinds though, is this just not a stock that really follows the Bitcoin cycle?
Yeah, it's just a leverage bet on Bitcoin.
Yeah. Do you know what I mean? Like,
well, this is my next point really, is that it's not just a one-trick pony anymore.
Okay, you make the case,
So-
I'll make the counter case.
Yeah.
I'm going to say it is.
Okay, so
I'm trying to overlay the chart, but
it definitely is correlated because
Yeah.
when there's fear and
Activities are-
uncertainty in
Yeah.
crypto, activity drops. But 5 years ago, 90% of their revenues came from trading. Now it's 60%, and they're trying to get that lower and lower. And really, what it's trying to do, it's trying to build critical infrastructure for the entire crypto economy. So this can get quite technical, but I'll rattle off some just to give a flavor of some of the things it's doing. We've talked about the custody storage there for things like the ETFs and big fund holdings. That's growing massively. They also offer staking now. So think of that like earning interest off your money in the savings account. You lock up some of your crypto, that helps support the blockchain operations, and then you get rewards or interest in return, and Coinbase get a cut of that for enabling it. They also have, they developed a base layer which goes on top of Ethereum. So that's basically designed to make transactions quicker, cheaper, and still have the security of Ethereum. So think about like a toll on a road, on the digital payment system. And then another massive one is USDC. So they've co-developed this with Circle. This is a stable coin. Think of it like a digital twin to US dollar. So $1 equals 1 USDC. They have now 25% of the whole stablecoin market, 60 billion in supply in USDC. That's being widely used for trading, digital payments, decentralized finance, and last year alone they made $910 million just by people using that. So the income isn't completely tied to trading volumes. I think the big idea here is that if crypto goes mainstream, Coinbase, they could become the Amazon Web Services of this space. So like AWS powers the internet quietly in the background, Coinbase is trying to power the crypto economy behind the scenes.
So Bryce's question wasn't, is it tied to trading volume? Bryce's question was, is it tied to Bitcoin? And it is, because all of those things are like diversified ways to make more money from the crypto economy going mainstream. But it is just a question of like mass adoption of crypto. I don't think it's a bad bet to make, but like we should be clear-eyed about what the bet is.
Yeah, I think if you have strong views about Bitcoin and crypto, stay away. I'm a believer in this space.
I guess that's what I'm saying. Like it relies on, like you said, crypto going mainstream, for example.
Yeah, they're trying to place themselves as being the foundational infrastructure to drive mainstream crypto adoption.
I don't even think it's a question of trying anymore. I think they have positioned themselves there.
Yeah.
The question is now just like, are non-crypto people going to start using it?
Good question.
So give us just a quick look at the financials and valuation, because you've said it's been beaten up, down more than 50% still, but is it cheap?
Yeah, well, I've looked at the financials and like, it's pretty good. Like it's profitable, it's growing.
Surprising for crypto.
It's global. So the revenue doubled last year, 3 billion to 6 billion. Obviously, crypto had a really good year, so there's a story there.
Yeah.
But looking at, you just give a plug, I guess, to get started investing. You did the kind of 4 steps to picking stocks. Some of the financial metrics you looked at in there, like return on equity, 31%. So that gets a tick. Reinvesting around 60% of its cash flow into growth, big tick there. Profit margins are currently about 60%. And they're now in over 100 countries, 98 million people using the platform. It was trading at a 15p to E before today. It's now around 18. So yeah, the market's freaking out a little bit over crypto's recent dip. If you do believe in the future of crypto being a bigger part of our lives, this could be one to check out. Brace yourself, it's probably going to be volatile. I think I'll be dollar cost averaging in from here.
For me though, when I think about this, it's just like, if you believe in crypto, isn't it the play just Bitcoin?
Well, this would be a leverage.
Bitcoin maxi.
I don't know. I like those numbers. That's the thing that convinced me more than anything. 100% revenue growth rate, 60% profit margin, 30% ROE.
Yeah, well, let's see what the revenue is this year.
60% of its cash flow.
How consistent is that revenue growth?
Take the
I bet that revenue growth is pretty cyclical.
Yeah, it has. It has been
I
cyclical.
like how you've cherry-picked 1 year.
But I think the key thing for me is that in previous years, that 90% was trading volume. Now only 60%.
I think
So it
yeah.
should smooth out somewhat, but it is still heavily tied.
Yeah, definitely. Yeah.
All right,
Nice.
love it. We'll put that on the Mr. Beat Up watch list. Coinbase, what's it trading at now?
$175.
Okay.
We should also say that we'll put a link in the show notes to that checklist that we spoke about on Get Started Investing. It's a 4-step checklist to analyze any company, and Mr. Beat Up used a few of the metrics there. So yeah, we'll make sure we put a link in the show notes to that. Love it.
Yeah.
Thanks, Simon.
Thanks,
Great to
mate.
be here. Cheers.
If you have a stock that you would like Mr. Beat Up to have a look at, to review, to get his thoughts on at a time like this where there is plenty of opportunity out there, hit us up, equitymates.com/contact, and we'll add it to his list. As we said, we'll bring him back as long as the demand is there. That frequency will only continue to increase. So thank you so much, as always, Simon. We appreciate it.
Cheers. Thanks.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.